Hello guys, welcome back to a new episode, RALLYTOP Investing 3.0 SMC Masterclass here. In today's episode, I want to teach you how to actually do a top-down analysis like a professional. I'm talking about you doing top-down analysis in the most simplistic form that you can ever think about. Now, for those of you out there who actually lack the patience and want to be a scalper in the market, this video may not actually help you. If you are actually getting yourself prepared to be a 7-figure trader, then you must learn how to take trades in the market that will give you reasonable reward to risk instead of 1-to-1 or 1-to-1.5. You can be getting like 1-to-5, 1-to-10 and all of that. So if that's what you're interested in, then you need to stick with me to the end of this video, because I'm going to show you step by step on how to use the daily time frame to do your analysis and then enter trades on the 5M time frame. So simple. Okay then, so let's dive into the step-by-step approach. Now, I sent this out in my VIP community. We looked at it yesterday. A student was asking a question and I brought this up for the student to see. Okay? This is not hindsight. This is you understanding what is going on in the market, and then you can take your trade based on that. So, how do you do the top-down analysis? That's the most important thing here. Now, let me clear up the chart, and I can start from a clean chart so that it doesn't confuse anybody. So, the first thing you need to do when you get to the chart is for you to really look at what is going on in the market. Let's get to the daily time frame first of all. So this is the daily time frame of Euro USD, and of course this is the current price action. If you go to your chart, you'll follow me there. Now, first of all, you need to determine your structures in the market. There are two ways you can approach the market, no doubt. You can approach the market using the structures of the market, or you use candle by candle. But in this case, I used the structures in the market, all right, to be able to get this trade easily. Now, first of all, what are the structures in the market here? Look at this high. Is this a valid high? It can only be a valid high if it has taken out inducement. And as you can see, inducement right there was taken out, which is a form of liquidity. And therefore, this high is confirmed as a valid high. And now, your higher low will not be confirmed until price travels back out to take out this major structure high and close above it. And as you can see, that happened there, meaning that this becomes our low in the market. This is our current low on the daily time frame, guys. Please get it straight. That's on the daily time frame. Now, we have identified our low, but where is our high? Well, this is a new high. This high can only be confirmed if it has taken out inducement. And so where is the inducement here? Right here is your inducement, guys. And as you can see, price took it out. Okay? Now, after taking out that inducement, your high is now confirmed on the daily time frame. So after I did that, this is my range high on the daily time frame, and this is my range low. After inducement is taken out, only two areas of interest work within your trading range. And that's your decisional area of interest and your extreme area of interest. Now, as you can see here, everything here has been mitigated. So we don't find any area of interest here that we can really look to take this trade from on the daily time frame. So what did I do? I scaled down to the 4H to find just simply the area of interest, the areas of interest that I can really take this trade from. Okay? And when I went to the 4H and starting from the low here, remember, this is our range low here. Now, starting from the low here, if you look at this zone, you start with this. This is your zone on the 4H. But this zone is pretty much large. Okay? I wouldn't want to go with this large zone. So what I did was that I said, okay, let me also mark out this OB here. Why did I mark out the OB? Because if I wanted to mark out the order flow, it's already mitigated by this candle. So I needed to mark out this OB here as my valid OB. And then, where is your decisional area of interest here? After inducement, everything is mitigated here, so we cannot use that. And then we have this decisional area of interest right here. Now, if you have to use this order flow, it's already mitigated. So I resorted to this OB. That's why you find it right here. This is the OB, and this is the next point that I marked here. Now, I didn't make use of this large order flow here. Now, these were the two areas of interest, as you can see, like I showed to you initially. Look at it here. These are the two areas of interest, all right, that I marked out before the trade happened. Now, let's stretch it out and see what happens. This is your decisional. Remember, your decisional is 50-50. Price tapped into that decisional area of interest. As price tapped into that decisional area of interest on the 4H, look, I went to the 1H and I needed to confirm that I was in the right direction. Now, this is the 1H and price has tapped into it. Now, since price has tapped into it, what did I do? Look at where price tapped into it precisely. What did I do? I now had to look at the structures of the market. If you look at the structures of the market, price is making lower low, lower high, lower low, lower high, lower low, lower high into this higher time frame area of interest, all right, on the 1H time frame. So I looked at it and I wanted to know what to do here. Look at what price did here. Let me just quickly show that to us so we can get it right. So from this high, price printed this low here and went back up and came back down, all right, to print this low. Went back higher. Now, this was where we were yesterday. So a student was asking, how could he have taken a direct entry here? Now, I said to him, look at this. All these are sweeps. Which of the sweep is valid here? This was a sweep. This was also a sweep. Okay? This was also a sweep. You need to pay attention to details. This was also a sweep. So I asked them, which of these sweep is valid to take trade from? And then they pointed out this sweep here. I said, correct. That's the sweep that is valid. So I told them that the way to have taken it would have been to wait for this candle to close below this very shooting star that swept all the liquidity here. Wait for this candle to close below, and then you could have taken your trade from here and your stop loss there. And that means that you take your trade going short from there, from this point to this zone, because this is higher time frame zone. That was as at yesterday before it played out. Okay? And now, once price taps into this zone, what do we want? Let me take out price from here so that I show you what exactly we should be waiting for. As price taps into this zone, look, what you should do, first of all, this is a higher time frame zone. Now, look, this is the last lower high before this lower low here, okay? So, this is important for us to understand. So, you mark this out, okay, as your 1H chalk. Remember, price has tapped into higher time frame area of interest. So, this cannot be an inducement. This will be converted to chalk, all right? So, that is our 1H chalk. So that by the time we get to the 5M time frame, we'll be able to take trade to this point here. Because as soon as price takes out this chalk, either by candle wake or candle closure, then you can take decision based on that. So our point of target is this 1H chalk if we go to the 5M time frame. Now let's quickly get to the 5M time frame. So this is where we are on the 5M time frame. Remember, this is the daily, the 4H time frame area of interest. Decisional area of interest, that is. Remember, we still have another area of interest below here. Okay? Remember that? So this is decisional. Now, how do we take advantage of this decisional? Decisional is 50-50. It can hold, it may not hold. But you need to treat your trading plan. Now, this is our trading plan. Price has tapped into this area of interest. We are waiting for change of character to take place. So here is the last high before that lower low. This will become your change of character, but we need a candle closure on that change of character. As you can see, this is a candle wick. We do not work with a candle wick to determine our change of character. So we want to wait for price to close above this very high before we can say we have a change of character. And therefore we can continue to advance price and see what happens. So as you can see, price eventually closed above. This candle closed above. All right. So once that candle closed above, our chalk has been established. Now, when chalk is established, we need to wait for inducement. But in this case, we don't need inducement because already liquidity has been taken below here. So we do not need inducement. So we can actually mark out this candle, this one, that swept this previous candle's low, and then this one closed above. This is a strong candle pattern that tells you that price is going higher from here. It's likely, not price is going, it's likely to go higher from here. And therefore, let's continue to play price and see what happens. Now, I placed my pending order just right here and went to bed. Okay? So let's see what happens. Okay, so price has come into this zone. It has given us inducement nevertheless, which is very, very good. To give us inducement. So this is your inducement in the market. Price gave that inducement and then came back, tapped into this zone, and then we want to see whether it can go our way. Let's see. Now, we can actually frame the trade. From this zone, we want to go long. So remember, our TP is at that high. But let's finish framing this first of all. Now, your stop loss just below here, just below. Okay, you give a buffer. And so your TP, let's look at this. This is our TP here, guys. This is our TP. If this trade goes our way, it's going to give us about 11 hours, which is crazy. This is the importance of using the daily time frame and then all the higher time frame to mark your areas of interest and patiently wait for price to come into it. So now this will give us about 11.45 hours. This is crazy, almost 12 hours. Now let's see whether price will go our direction. This is a sniper entry. Now remember, this is 5M, so it's going to take some time for it to get there. So, but let's move to the 1H and make it a bit faster. Boom. Can you see that? Look at it here. Price hit our TP. Simple and straightforward. You don't need to stress yourself. All you need is some form of patience to wait. Do your analysis from the higher time frame and then just go straight to your lower time frame and wait for price to come and respect your higher time frame zone, and then you take your trade from there. It's as simple as that. There are advantages when you do that. Number one advantage is that you are going to get a sniper entry. I'm talking about your stop loss being very small, and then you can maximize your profit. That's number one. Number two, you have this confirmation on the lower time frame that price is actually going your direction. So that is the way I took that trade on the 5M time frame. So that is how to do your top-down analysis. It's as simple as that. Don't make it complicated. All right, guys, I hope you enjoyed this video. If you did, please give us your like and hit the subscribe button to become part of our family and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. All right, guys, thanks for watching. I see you in our next episode.